Hello, everybody. All right, welcome back. It is another time for YouTube Live, and we are going to discuss selling a house. Sellers right now in Phoenix, what is going on? It's brutal. Okay. It's brutal for a seller right now in Phoenix. So, should you be selling right now or should you not be? That's the question we're going to cover here today. And we're going to go over some data because, again, we're always based off of facts, not fiction. Okay. So, here we go, guys. We're going to jump right into it. Should you sell your house? Man, it's brutal right now. Okay. Things are taking longer to sell. And before we go any further, guys, let me know where you're from. Okay. We're going to rock and roll on this and provide some cool, entertaining data. Is that, by the way, does that go together? Entertainment and data? I don't know. But we're going to try to make it as fun as possible and informative, of course. And make sure you guys are aware of where we stand in Phoenix right now. So please let us know where you're from. Put your questions in the chat and we will rock and roll on this thing and have an informative, fun, I don't know, 25, 30 minutes or so, right? All right. I love it. So first one, Michael Freeman, what's up, brother? Know the data. That's right. Got to know the data. We're going to make sure we get after it here so that you are aware of just that. So we're going to jump right in. Okay. Jump right in. And we're going to share my screen here and we're going to talk about Opendoor, iBuyers, guys. Okay. Now, if you're in a market right now, tuning in from somewhere in the country, which some of our listeners and viewers do, it is maybe a little different in terms of your marketplace with corporations buying homes. In Phoenix, Opendoor and OfferPad dominate the corporate buyers, okay, ever since Zillow exited earlier early in the year here. So here we go. Opendoor. Oh, boy. Look at this, guys. Laying off 550 employees, including Arizona employees as well. Now, we don't know how many Arizona employees they actually laid off, but it's turbulent. Here we go. Okay. San Francisco-based Opendoor Technology Incorporated. They have a huge presence in Phoenix, and they announced they are laying off 18% of its workforce, guys. That is an enormous layoff, okay? Now, unfortunately, we're seeing more and more of this with some of these big companies in the real estate space, the Loan Depots of the world, Quicken Mortgages, Opendoor, and so on and so forth. So what's crazy is they had apparently they had a conference call and they let everyone know within an hour after the conference call who was getting laid off and who was going to actually make it with their position. But the bottom line is I read in here, guys, that they had an enormous amount of revenue, but they still lost money. Here we go. $4.2 billion during the 3 months that ended of June 30th this year, and yet of revenue, and they lost $54 million. I mean, that's staggering, right? It's staggering. But I don't know, guys, how Opendoor survives this. I don't know, how they're going to be around next year at this time. I mean, it's always possible. But if you're an investor, are you going to double down on that and throw more money at it? I don't know if you would do that, right? But we'll see what happens. There's so much venture capital already invested in Opendoor that we'll see what happens. Are they too big to not fill, right? We'll see what happens there. But let me give you buying hack number one, okay? And it goes along with this. I got 3 of them today, guys. 3 buying hacks that you're going to want to tune in for. In fact, I might do a whole separate video on just these because they're so powerful. But first buyer hack, if you want a good deal, then give it your local real estate professional a call. Hopefully it's us over here at Cook & Associates, and we would be happy to send you a list of properties specifically owned and listed by Opendoor and OfferPad, okay? Because, guys, it's a numbers game. It's non-emotional for them. They have to get rid of certain properties to make a profit, make shareholders happy to an extent, right? And so they will sell a house no matter how low they have to go. So if you want a good deal, you have all kinds of negotiating leverage power when the person you're negotiating against is Opendoor or OfferPad as a seller. So there you go. Buying hack number 1. We'll get to 2 more here later on in this live video. All right, so here we go. I also want to talk about some development here, okay? This is interesting. Let's talk about this, right? So we talk about the housing market here. Well, this is a build-to-rent developer, okay? Now, this is big. I'm not sure about in your marketplace, but in Phoenix, this is getting bigger and bigger and more popular and popular. A lot of developers are moving over to the build-to-rent type projects. What does that mean? They actually spend hundreds of millions of dollars to develop a community, let's say, only to rent it. So they have no, which is just counterintuitive to what, the U.S. housing market's been when it comes to new construction for the past, since ever, as far as I'm aware, right? But these they're building new construction to actually rent them out with no intention to sell them. And what's interesting, this is one here that Mosaic is the company. They're based out of California and Phoenix, actually. And they have 209 luxury townhouses that they're building right now, over 14 acres or so. But it's all about amenities. It's all about community. And they know that the baby boomers are retiring, right? And so now they're trying to build product that they don't have to worry about the housing market selling because the rental market is still really strong. And even though it's starting to flatten off, it's still strong. And so they're going to obviously rent these out. And people love new construction, but maybe a lot of people don't want the feeling of being locked down in a mortgage, or if you're older, maybe a reverse mortgage as a retiree. So they are doing this. So I thought this is kind of interesting because this is becoming more and more popular in the Phoenix area. Okay. So what's interesting is the company here is built off of technology. So I think they said something like 1/3 of their staff is actually software developers. They're not even engineers or construction management type people. Yeah, here we go. Out of 150 employees, 30 are on the technology development team. So they're really trying to make this a technology driven community that has all the amenities and bells and whistles you could possibly ever want. So kind of interesting. Speaking of development, this is new news here. So the old Douglas Ranch here, guys, that we all know or maybe you've heard about in Buckeye, is being renamed to Teravalis. Okay, Teravalis, and it's purchased by the Howard Hughes Corporation. And JDM is also a partner on that. JDM is Jerry Colangelo's company as well for development. And guys, this is going to take about 50 years to build. Look at this, including 300,000 residents living in 100,000 homes, guys. So that is a city in itself out in the West Valley in Buckeye. 37,000 acre master plan community will be developed over the next 50 years, including 55 million square feet of commercial space, where, of course, jobs will be created. So, guys, if you have a long-term plan on something, think about this right now. If you're an investor, especially, you could buy, or maybe you're just a homeowner, but you could buy in Buckeye for cheap. Okay. Because I'm going to show you this. If you pop over to this is a graph I want to show you that I show you almost every single time we have a live, because this is a really good graph to let you know what the housing market's really doing in Phoenix. Let's go to Buckeye. Okay. Now look at this right now. Let me give you some perspective. A balanced market, according to the CMI, the Cromford Market Index, guys, which the Cromford Report is the foremost authority for housing economics and data in the state of Arizona. Well, here we go. The market index is 50.8. A balanced market, guys, is 90 to 110. Okay, 90 to 110. That's a balanced market. Anything above, below is a buyer or seller's market. So right now, we are at a severe buyer's market. Investors, listen up, right? Guys, this is reminiscent of what happened to the housing market back when, we were in 08 to 2012. Now, this is nothing like how it was back then. The fundamentals are not like that. Let me repeat that. The foundational fundamentals are much different. No one's anticipating any type of the Great Recession again. But we all PSTD about it or from it. So we all want to go there, right? But it's not. However, it is a severe buyer's market right now. So if you are going to purchase a property from Opendoor in Buckeye and then hold it for a while, you might be onto something here, because it's only going to get bigger and bigger and bigger. Guys, did you know that Buckeye is actually the second largest town or city in the Phoenix area, right behind Phoenix? It is huge when it comes to land size and land mass. Obviously, population is nowhere close to number 2, but it is huge. And a lot of development will be happening in Buckeye over the next decade or 5, according to this article. Okay, so this is interesting. And again, this is called Teravalis. Okay, so pretty interesting. There's Jerry Colangelo, and they are partnering with Howard Hughes to build this enormous city in itself in Buckeye. All right, now one more thing I want to show you here, guys, is interesting, I thought. Okay, migration magnets. Okay, these counties are attracting the most new Arizona residents. Now, this is something that we as a real estate team, we track very closely, because we want to know how to market best for our clients looking to sell a house. Okay, so what we do is we figure out where are the places across America, that are responsible for the most population, coming into Maricopa County, which is the greater Phoenix area, right? It is a huge county. All right, here we go. Maricopa County, ranked number 1 in the nation. for the most population net migration. Okay, so between 2019 and 2020, seen a net migration of 21,934 tax filers. Net migration is the amount of people coming in, obviously subtracted from the people who leave. And they go on to say that 5 of Arizona's most populous counties made the mark on this list. Pinal County is number 10 in the country, Pima number 24, which is where Tucson is, and then Yavapai County 34, Mojave number 47. And then if you go, in fact, there are only 2 Arizona counties, check this out, guys, that showed positive, but 2 showed positive net migration. So only 2 had negative net migration. But what's really cool, by the way, no shocker here, guys, Californians make up the majority of the inbound Arizona residents, right? Now, what's interesting is it shows you how many people were added, right? But then you can come down here, guys, and this is really cool. We won't go, super in depth on this, but you can see the largest. Well, first of all, here's the largest losses. Okay, large counties that had the largest net migration. Okay, here we go: New York, San Francisco, Chicago, Dallas. All right, that's interesting with the counties that surround those cities. But look at here. Here's the graph. So Massachusetts, Suffolk County. I'm not sure. That's probably Boston. Bronx County, New York. Santa Clara County, California. Miami-Dade, which is Miami, Florida. Queens County, New York. San Francisco County, California. Then we have Kings County, New York. Cook County, which is Chicago, Illinois. And then New York County, and then Los Angeles County. Guys, these are where people are leaving and going elsewhere in the country. I thought that's kind of interesting. Now, we as marketers, as real estate agents, because we are marketers as well, when we have a client looking to sell a house, what we do is we take that information and use it to our advantage. We then send and create demographic target marketing ads that we then send out to these other cities that are responsible for bringing the most net migration into Maricopa County. Why? Well, because we want to be proactive. We want to tell people about the houses that we're marketing and selling. And what better way to do it than to alert the people who might have the highest propensity to move down to Maricopa County or Phoenix area, right? I think it's just brilliant. But let us know what you think, guys. Is this good stuff? Is it bad stuff? Is that something you'd be looking for if you are looking to sell your house? Speaking of which, do you want to sell right now? Well, let's jump over here. Okay, let's talk about this here. These are the different cities across the Phoenix area, and a lot of these are negative now on the the Cromford Market Index. You have some of these that are positive. The more affluent ones, Scottsdale. You have Fountain Hills. Okay, which is up here, and of course Paradise Valley. Those kind of the usual 3 suspects that are usually leading the charge for the positive side. Then you have the Arizona outskirts of the valley, like Queen Creek, Buckeye, etc., that are just really in the red here right now. Okay, so it depends kind of where, if you want to sell, it depends where you're going to be. Right now, it's not a great time if you can hold off to potentially sell from that standpoint. However, that's a blanket statement, guys. You can't go off just that. You might live in Scottsdale. You might live in Paradise Valley. And those areas of town have a much more seasonal buyer presence than places like Buckeye, Goodyear, Queen Creek, Santan Valley that are on the outskirts of the valley. So that being said, it might be a really good time to put your house on the market right now if you're in a certain area of Scottsdale. Why? Because there's very little supply. Okay, look at the supply index. Okay, it's in the red. That means supply is low, but demand is also low, which causes for Queen Creek this very low number. But what if you're in Scottsdale, as an example? Okay, you have lower supply. Okay, or I'm sorry, in Queen Creek, I messed that up, guys. I apologize. Higher supply right there. That's in the red. Okay, and low demand, which causes obviously a very, very buyer-friendly environment. But if you go over here to Scottsdale, for as an example, you have low supply, low demand, and it's still a pretty decent market overall. Decent. So right now, if you put your house on the market, let's say, you have a very good chance to sell to somebody who maybe is a cash buyer if they're in a certain market like Scottsdale, Fountain Hills, etc., higher propensity, or they're just overall not as rate sensitive or monthly payment sensitive. And if that's the case, then you will have far less competition because supply is low, right? Supply is low. And so there's only so many houses that someone can choose from if they're looking to buy right now. So it depends where you're at. If you're in Buckeye right now, if you're in Santan Valley, if you're in Goodyear, let's just pull up Goodyear as a different example. There it is. 82.6. Okay. Levine, 104. Hey, not bad there. Maricopa, 54.7. If you're in Maricopa, this Maricopa town of Maricopa, right? Not the Maricopa County. Holy cow, it's on the outskirts. You better be prepared to be the cleanest, dirtiest shirt in the closet, right? Your house better be dialed in, not a lot of repairs, and priced appropriately. It still will sell because there are still some buyers, just not as many as there usually is. Okay. Otherwise, you can wait until after the holidays when the seasonal market and demand really picks up, which it always does in Arizona and Phoenix here because it's warm, right? And for the weather, people come down here and want to spend time, play golf, etc. You could do that, and if you do that, then potentially you will have more demand looking at your house. However, you will have more competition. In fact, let's look at the average listings right here. Okay, active listing count. Okay, now this is where it's been since October of last year to November of this year. You can see, look at this, guys, the numbers here, 7,000, 6,000, 6,000, and then it just takes off, right? Takes off because more people are putting the house in the market and there's just no demand to soak it up. So now you're at 19,182 homes on the market for sale. So if you're a seller right now, you have to compete with all of that. Not as ideal. But let's get some context on this, guys. Here's the context. Very important to understand this. Look at the context on this. Right now, the average days on market, okay, 54 days. Okay, we'll call it 55 round up. Okay, 55 days. Now, let's go back to 2020, quarter one, before COVID hit, right? Okay, here we are. This is January, Q1 2020. Average days on market, 62. Compared to right now, it's 55. Think about that, guys. Think about that. Furthermore, let's go back to a more normal year, 2019 here, and you can see the seasonality of Phoenix's market. See how it dips down? Average days on market continue to decline, right? Okay, slowly but surely, because you start to have more and more buyer demand and less, activity in the summertime, right? As you get into August here, it kind of balances itself out because you have less people putting on their house on the market because they're traveling, going up north, getting out of the heat. You also have less demand too as well. But then you get down in the quarter three, quarter four, and look what happens. Towards the end of quarter four, look at this uptick right here. Demand days on market starts to increase, but it's really good towards the end of the year right now in quarter four for October and November, traditionally. Let's go to quarter four of 2018. Okay. October, November, not too bad. It gets a little more in December. 2017, quarter four, okay, not too bad. Gets worse in December, and then it gets worse in January. And look, it's even higher in February. It's higher in February before it comes back down in quarter two, okay? So guys, it's because the sales cycle of real estate is longer. We need to understand this. There is a property out there that if you need to sell, if you don't have to sell, it still makes sense for you to do so right now. However, I'm not going to sugarcoat it. It's rough out there overall as a blanket statement as a seller. However, please consult your local real estate professional. Hopefully someone here at the Cook & Associates would be happy to talk to you about this and give you the data on your specific zip code and your specific neighborhood, more importantly, to really understand what the demand and supply looks like and if it may be a great time to sell your house because of those things we just talked about. I shouldn't say great, but good time, okay? We may not have a great time to sell a house for a while, guys. And I mean, but who knows, maybe a year or two. It just depends on the economic conditions and what the Federal Reserve does with rates so that people's buying power can get better. Now, we talked about this on a previous live, but if you haven't watched it, I'm going to give you this tidbit as well. Look for Phoenix buyers or sellers. Look for when the Federal Reserve manipulates rates to the point in which the average mortgage rate, 30-year fixed to say, is about 5.5%. At 5.5% on the way this climb we had up over the past, 5 months or so, at 5.5% for the Phoenix market, that's when we were in balance. Okay, that's when we were in balance. So the data shows that at 5.5, everyone kind of liked it. The buyers were buying, the sellers were still selling, although not like in one weekend. And that was a pretty good market. So for Phoenix, if we had a Phoenix Federal Reserve or if we had a Arizona Federal Reserve, you can make the argument that you would set the rate at 5.5 and everything would be hunky-dory to an extent, okay? But it doesn't work that way, unfortunately, because the Fed is national. So if the Fed starts dropping rates at some point in 2023, which a lot of people are saying could very well happen, because they're going to overcorrect this thing potentially. Then when it gets to that number, that's when this thing, the market could really start getting somewhat robust again. Not like it was 6 months ago, 8 months ago, but robust where people are just buying and selling. Home appreciation is not through the roof, but it's positive, and we have a quote unquote normal market. So that's a quick tidbit to look for. All right, now I'm going to give you buying hack. Okay, buying hack number 2. Okay, buying hack number 2, guys. If you're looking to purchase, and then I'll do the third one here. Number 2 is interest rate buy down. Now we talked about that, but did you know that in addition to a 1-1 or 2-1 buy down, there's a 3-2-1 buy down? Let me give you a quick story. Okay, I got a client right now who's under contract on a property that is purchasing right now. Okay, and for him, like most people, it's about the monthly payment. So what he decided to do was do a 3-2-1 buy down because that got him his payment to where it needed to be with the roll of dice gamble to an extent, right? But it's a calculated gamble, okay? That rates will be coming down in the next 12 to 24 months, hopefully, if not sooner. So what that looked like for him is his rate was at 7.5%, fully indexed approved rate. First year with a 3-2-1 buy down, first year, it was at 4.5%. So guys, at 4.5%, that sounds eerily similar to where rates were at some point earlier this year. And no one balked at that, right? Everyone was cool kind of with a 4.5%. That was great. And then in year 2, what will happen is his rate will go to 5.5%. In year 3, it will go to 6.5%. And then in year 4, if he never refinances, it will then kick in to the fully indexed approved rate at 7.5, in which it will stay fixed for the remainder of his loan. So if someone out there needs to buy, or maybe doesn't need to buy but would like to buy, but sitting there going, man, I'm just going to pay rent because I don't know what's going to happen. Don't be the person that tries to time the market, because then the question becomes, okay, when the Fed does start dropping rates, whenever that may be, then the question becomes, if they drop them 50 basis points on that first drop, whenever that is, at some point in the future, then what will you do? Will you sit there and go, well, I think it's going to maybe go down another 50 basis points when they meet next month, so I'm going to wait. And I'm going to wait to try to see how fast they drop this thing so that I can time it correctly, guys. And that is not, in my humble opinion, that's not the way to do this, guys, because you want to get in the game as a buyer. Stop paying 100% interest. And if a payment makes sense, if a property that you want to buy for your family, for yourself makes sense, then consider it and consider it strongly. Okay. But know why you want to purchase it. What's the game plan? What's the reason, right? Otherwise, you could end up trying to time the bottom and you're going to miss it because everyone does, unless you're just plain old lucky. And before you know it, you're renting for another 3 years, because 3 years goes by pretty fast no matter what. All right, that's my rant on that. Now I'm going to show you this, guys. We're going to go over here and we're going to show our monthly market report. Some of this is going to be a little redundant, but I want to give you a summation of this report. Okay, so we know about the Cromford Market Index. We're going to we'll look at some graphs really, really quick here. Let's take a peek. Okay, 2022 is green. Here we go. Average sales price. Look at that. Since July, it is held. Okay. Oops. Let me share it. Sorry. All right. Here we go. Now you can see what I'm seeing. Hallelujah. Okay. It is shared. By the way, let me go back up here. This is our Cook & Associates October 2022 monthly market report that we sent out to our clients. If you want one, put it in the comment, DM me on social media, and we'll be happy to send this to you as well on a monthly basis so you can stay informed. Here we go. Average sales price. Look at this, guys. Across Maricopa County, it has stayed the same since July, or somewhat the same since July. So everyone's like, oh my goodness, the values are going down, down, down. Well, according to the data, not really. They've just flattened. Okay. They came down significantly because this is a pretty big mark right here from June to July. But then since then, they've kind of just flattened out a little bit and are kind of doing this. So let's go to active listings. No secret there. Way up, right? Way up, more competition than ever. Well, since 2019 for selling a house. Now let's go to new listings. New listings hitting the market. This is the good news here, guys. Look at this. The green arrow is down. Now, normally it is down. Look, you see the other years right here. Okay. But normally it doesn't go down, till about October or so. And then it starts decreasing in terms of the amount of new listings hit the market because of obviously Thanksgiving, Christmas. That's people's traditional thought. But it started going down a little further, a little more since then. And I think a lot of it has to do with the fact that, look, people are to some degree uninformed. They think it's just the sky's falling, so I'm going to hold off. And it's not great, but they want to hold off. Or maybe they have a 3% interest rate. So, and a record number of homeowners have a rate that is very low right now, 3 to 4%, let's say. And so they just don't want to sell, even though they would love to sell. They're not going to because they have this amazing interest rate with a low payment. Fair enough. Okay. Sold listings. This is, look at this, guys. It's actually held fairly steady since July, but now in October, it actually did drop down a little bit. The number of properties that are selling are decreasing. Okay. Average days on market going up. No secret there, right? Ever since May 13th, that was the height of our market. And then there goes the rise. Okay. We are now about that 55-day mark for days on market. Okay. This is an interesting graph here. Value of single-family homes in 17 cities in the Phoenix Valley. Guys, here's a Cromford report. This is a good graph. We have not seen this one yet. And here we go. Everything is red across the board. Everything is down in terms of the change from last month to today across the board, except for Gilbert just barely hanging on there. And then, of course, Buckeye being about even at 0. Okay. But Buckeye didn't have too many more, places to go but up. So it's down pretty significant right now. So Buckeye, keep holding on, baby. We're rooting for you. Okay. Same with you in Queen Creek. Now, but look at this, guys. These red arrows going down, not a good sign, obviously, for someone who has to sell and maybe needs to maximize the value because maybe they just bought just a little while ago. Or maybe they bought a long time ago, but they refinanced and pulled a bunch of cash out and they have a huge loan amount. If you have to sell for top dollar right now, but don't have to, maybe you should wait in certain areas of the valley. But other areas of the valley, like we talked about, maybe it's still a great time because less competition, a lot of cash buyers in the buyer pool, and you have an ability to sell and move on. Especially, guys, for people who are doing the timing, right? What if you guys, what if someone out there needs to sell and buy? Okay. Now, it's funny. The scenario is just literally flipped, guys, because, about 8 months ago, that was the question. Well, I'd love to sell my house because I can get top dollar, but where am I going to go? Now, the same scenario is just flipped on its head, right? Now it's like, well, I'd love to sell because now it's time I can get a great buy. I have leverage, but then I'm selling for not so the best price. But maybe if you're looking to sell in a place with higher demand and cash buyers, seasonal buyer influx, and looking to buy in an area that doesn't have that, you can actually get the best of both worlds. So let us know what your thoughts are on that. Okay, we'd love to help out. Okay. Last but not least here, listing success rate. That's obviously going down because less homes, are being successful actually selling when they go on the market. Now let's talk about iBuyer activity real quick. We talked about Opendoor, right? But I'm going to show you this here real quick. The strategy has led to a huge drop in sales, okay, down here, and purchase volume. Okay. In September, OfferPad sold 43 homes for $18.8 million, which had cost them $18.8 million. 56% of homes were sold for less than they cost, and 44% sold for more. They still have that 5% fee they charge the original seller. Guys, remember, these iBuyers, they charge sellers fees just like a regular realtor does, okay? And they don't give you the full market value, okay? And we estimate they paid $4.7 in buyer broker commission and bonuses plus concessions to the buyers. This leaves them with a slim but positive contribution of 0.3. It's not much, but it's a lot healthier. This is OfferPad than the negative 10.2% we calculate for Opendoor using the same methodology. So Opendoor is in trouble, guys. Okay, they're buying homes for too thin of a margin, and now the market corrected. The only thing that keeps OfferPad at this break-even point, pretty much, is the fact that when the market started to change back in March, they moved quickly and stopped buying remotely close to the amount of homes they were buying prior to May of 13th. Okay, now. Here we go. More buyers got help with closing costs in September and what to expect for housing in the fourth quarter. Okay, guys, this is what we talk about. This is what you guys need to be fully informed of. All right. September saw 1372 closings involving seller closing cost assistance to the buyer, equating to 23% of all sales. A median concession of $7,000. Guys, the average seller right now is giving away $7,000 for you to buy down your rate or use for your closing costs, however you see fit. As a buyer representative, there is no fee on our end, but obviously as a buyer, you will experience fees when it comes to a lender and title escrow company, okay? So Opendoor, as a seller, pay concessions on 355 transactions, which is 77% of their sales through the MLS, which is insane. That's why buyer hack number 1 was look for a property to buy that Opendoor owns, okay? Now, for sellers, okay, this is interesting. While this is disappointing to those who purchased this year, 66% of active sellers in MLS, okay, have owned their home for 2 years or longer. a lot of equity. This means that even with the most recent downturn in price, the 2-year appreciation rate from September to 2020 through 2022 is still 40.3% positive net appreciation. Okay. And the median sell price is still $112,000 higher than it was 2 years ago, indicating that most sellers have enough equity to shoulder the added cost to sell in this marketplace if they must. Guys, we just sold a property for a client of ours, an awesome client of ours, and they didn't get the price they wanted. Okay. Most are not right now. But at the end of the day, his argument was, or justification was, well, shoot, I mean, it's hard to argue. I didn't get the price I wanted, but it's hard to argue with the fact that my property value doubled since I bought it a couple of years ago. Doubled, even though it wasn't the price he wanted based upon where the market was heading the first half of this year. Interesting, right? Okay, so here we go. Abby asked the question, once Douglas Ranch is up and running, I see Buckeye flying off the charts with growth. Abby, I would agree with you. It's going to take a long time, but it's a long-term play. If you're an investor or someone who wants to just speculate with the house that you live in, maybe that's a play for you to go buy in Buckeye. You can get a heck of a deal right now on any house listed in the market in Buckeye. Okay. She also asked, what do you think will happen with iBuyers in 2023? Do you think they'll recover as the market rebounds? It's a good question. I don't see that pathway right now. I don't. I think OfferPad will still survive. Now, I don't know all the financials of Opendoor, but obviously with the amount of money they're losing in the multi-millions of dollars right now, how does that company stay afloat as the business model, right? It's just, especially if this lingers on for a while with higher interest rates and not as many transactions selling across not just Phoenix, but the country. Because remember, Opendoor and OfferPad, for that matter, are in multiple different marketplaces across the U.S. So that's a good question. But I don't feel so optimistic about Opendoor in this situation unless they get a huge influx of venture capital. But again, if you're a venture capital group, or private equity, do you really want to double down or triple down on this mess? That's I don't know. I don't know that most would. Okay. So guys, let's finish up with buyer hack number 3. And this is a good one. Okay. All right. If you are looking to buy a house, did you know that somebody out there right now that say bought, a year or two or whatever ago, that their loan is an FHA or HUD loan, meaning it's government backed, maybe it's a VA through the HUD, right? Or FHA through HUD, that they will allow an assignment of that mortgage to a new buyer? Did you know that? That is huge. So let's say you're looking to buy and you call your local Cook & Associates realtor up and they do a search to pull all the properties that have a mortgage on them that is a HUD government-backed mortgage in the area you want to buy. And they pull that list and they start knocking on doors and calling on your behalf to try to ask somebody if they want to sell. Or maybe you get lucky in one of the homes that's already on the market for sale, you cross-reference the data and it's a government-backed loan. You could then call that person and you could ask them if they would willing to sell their house, by assigning from that servicer, assigning that loan to your buyer. And by doing so, guess what? You get to assume that mortgage that they have at 3.25%. I mean, how great is that? That is a good hack. So I'm glad you stuck around for the end of this live because that was some nuggets. So we could explain this to you further and more in depth or detail. You could leave us a comment. You could shoot us a DM on social media. We're everywhere at Kelly Cook Homes or Cook & Associates. And we'd love to chat with you further about this, guys. So thank you so much for joining. Remember the 3 buyer hacks. 1, 2, 3. All right, so you got the 1, which was I don't even know what it was anymore. I forgot. I'm live and it just blanked on me. No, but number 1 was to Number 2 was to get a rate buy down for 1-1, 2-1, or 3-1. And number 3 was find a government-backed mortgage and try to assume that loan for the price the seller wants to sell at. Okay, and you are in. All right. Oh, number 1 was find a house through Opendoor or OfferPad to buy because they'll negotiate with you and you'll get a great deal. Okay. All right. You can also, here's another comment here by Michael Freeman. Conventional assumption is also possible depending on who is servicing a loan. I love that. Thank you for throwing that in there. that is a great comment. So you can also do a subject to or some sort of assumption or wrap with a conventional loan too, if you would like to, and you find that person who's willing to do it for you, who currently owns that house and that mortgage. So thank you very much for that, Mike. I appreciate it. Let's rock and roll. Okay, guys, thank you so much for always joining our YouTube channel, Everything Phoenix, where we discuss that and we bring value to as much as we possibly can. Please reach out to us on social media. We'd love to chat with you about anything when it comes to buying, selling, relocating, or investing in real estate. It's passionate. It's what we do. It's Everything Phoenix. Thank you guys very much, and make it a fantastic day.